Now moving on to our special segment, What's Trending Today, we put the spotlight on Cipla, which is under pressure on the back of its cancer drug facing rising competition among other factors. Ekta is here to break it down for us and what it means for Cipla as well. Ekta.
Well, yes, the incoming MD and global CEO Achin Gupta might in fact have his task cut out for Cipla's US business. The US, which contributes around 27% of sales and delivered around $934 million in FY25, which were record sales, is now showing signs of pressure in FY26. The business, which generated $459 million in the first half of this year, has faced two setbacks within a fortnight at a time when the blockbuster cancer drug and key earnings driver Revlimid generic faces that expected rising competition to come through. Now, the big concern is Lanreotide, one of Cipla's top 3 US products, where manufacturing has been temporarily paused as partner Pharmathen's plant was slapped with 9 observations from the US FDA. Cipla expects resupply only by the first half of FY27, a risk given its 22% market share in the US. The second hit is rising competition in generic Advair. Lanreotide, which is Aurobindo's acquisition target, has become the 4th US FDA-approved player, shrinking the opportunity for Cipla, which is awaiting approval for nearly 6 years now. Street estimates now factor in 30 to 50% lower earnings from Advair than earlier projected. As a result, FY26, FY28 EPS estimates have been sliced by 1 to 4%, with the US sales seen as flattish to low single-digit decline amid pricing pressure and unresolved US FDA issues such as the Pithampur warning letter. While upcoming respiratory launches higher Brixon share, which is a cancer drug, and peptide drugs like teduglutide may in fact cushion the impact, expectations are being reset. The stock is trading at around 23 times FY26 and 21 times FY27, is down 5% in a month and flat over a year, reflecting that near-term caution. In fact, to talk more about this, we have Vishal Manchanda joining in. He's a pharma analyst at Systematix Group. Vishal, thank you very much for taking the time out. Well, definitely, it's rough weather that Cipla is facing with its US business. Just give us a sense in terms of, what you would be recommending to your clients, considering that they might see, delayed sales for Lanreotide now.
Mm-hmm. I think the correction very much factors in all the bad news that we have been witnessing on the stock lately. And if you look at the US business, it's typically like that. We always kind of see things coming everything coming in favor for companies and then everything moving adverse. So I think Cipla is in those kind of, is facing bad times, and probably the stock price is more or less kind of discounting almost everything in terms of bad news. So I would probably look to add the stock at this price. It's an opportunity. So I think most of the things like Lanreotide, supply disruption, Advair competition getting more intense, and the third one is basically delayed approval, Advair approval not coming through for Cipla. So it was expected in second half and we are almost 9 months now. So I think sooner or later, most of these things should be in place and earnings should rebound from where it is today. Even from a valuation perspective, if you look at the stock, it's trading at a steep discount to its historical median trailing 12-month P multiple. So I think it's almost the 10-year median P multiple is almost 30 and they are at 21 times FY27. So I see an opportunity here.
Okay. You see an opportunity there, but I just wanted to narrow down in terms of numbers. Say, for example, they did $934 million in terms of the US business in the previous fiscal. Just give us a sense in terms of what you're anticipating in terms of total sales for FY26. For the US business, to give us a sense in terms of, what the numbers could look like.
I think the US sales will be a broad range, but for now, I'm expecting almost, in my current estimates, I'm assuming flattish numbers on a YOY basis. So Revlimid coming off and that getting replaced with Advair, sort of some Abraxane ramp up and teduglutide launch. This is broadly my maths, but if you like the last quarter, in the last quarter earnings, Cipla had guided to be around a run rate of $1 billion by 4Q FY27. So if all the approvals that they are expecting pan out, then probably we are in for a surprise on the upside.
Okay. Vishal, you said there are certain triggers as well going ahead for Cipla. Ekta also mentioned some of the launches which could cushion the support or cushion the impact of this particular drug, the cancer drug that is.
Right.
What are the earnings that you're expecting from launches that would come by later? Is that a big trigger going forward?
So if I not going into each drug specifically, but if I look at a range of earnings that Cipla can deliver in FY27, so probably a worst case EPS number where I am at is 58 rupees EPS in FY27 and a best case EPS of about say 75-76 rupees per share. So if I look at numbers on the worst case EPS, they are at 25 times now. And if I look at them on the best case EPS, they are at almost 18 times on FY27.
Okay, Vishal, thank you so much for joining in this afternoon, explaining us, what all this means for Cipla as well as overall. We'll watch out for the pharma pack. Thank you so much for that. But on that